Discover new interests, strengthen friendships, and stay part of something positive. That happens because coaches, mentors, officers, and volunteers continue showing up every day, creating spaces where young people are safe, supported, and encouraged to grow. And you can see the impact. Kids stay active, they stay engaged, and they continue building skills that carry far beyond the summer months. Because when opportunity stays consistent, growth does too. Summer starts here.
Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We've got a great show lined up for you. I'm Harvey Freed. He's Harry Glanz.
Good morning, Harvey. Good morning, everybody. Welcome back, Harry Glanz, to the chair next to Harvey Freed after a couple of weeks. Harvey, it's been a little bit with me and you, but guess what? A lot of things have happened since I've been here the last 2 weeks. Jobs report came out. More jobs were created. Mortgage rates have relatively stayed the same, flat. We're going to get into that with our special guest, which you'll introduce in a second. Rates are in the 6.5, 6 5/8 range, everybody. I don't want to hear that they're high because they're not high. Sales are going crazy. If you can find a house, it's going to go in a minute. And we're heading into the middle of the summer, which I like. Go ahead, Harv.
Absolutely. John Kolb also joins us. And John, good morning. We haven't seen you two in a while. He's always up north doing his thing up there.
Yeah, I thought you forgot about me right to your left. But Dave, thanks, Harv, for that great introduction. 10 minutes in.
That's okay. But, and who's this lady you brought with you?
This is Nancy Warson, Real Estate One out of West Bloomfield. And
been here a lot. She's been here a lot because she's so good on the air. And she knows what she's doing, which is a plus.
Well, thank you.
Yep.
Yeah.
Sorry, guys. I'm working on my technical things here with this headphones set up. Hey, we take all your calls live, 248-539-9797. 1 hour, mortgage and real estate talk. If you want to sneak in some sports, we'll do that also with you. Tigers took it on the chin last night, and we definitely need them to come back today to maybe take that series. But we're going to give you 1 hour, definitely some real estate and mortgage stuff. And Harry, you threw in the rates right away, and there's some talks of maybe this Iran conflict ending, which is some good news possibly for mortgage rates.
What are you from, the South? Iran?
Iran.
Iran.
Not
Iran.
Iran. Iraq.
Right?
Call it Iraq.
Tomato.
How do you say Iraq?
Right, yeah.
How do you say Iraq? Iraq?
Yeah.
Well, you got the accent going and everything.
I don't have an accent. That's how you pronounce it.
All right. I got it wrong.
Ask all my friends who are in my neighborhood.
Okay, fair enough.
That's how we do it.
Definitely. With that being said, other geopolitical events could change things. And, of course, the bond market, the job market, everything's related. The economy showed that they created 172,000 jobs. I don't know where they come up with all these crazy numbers, but one thing for sure is we think mortgage rates are very affordable. Today's a good market. It's a great time to buy a house. And as we talk always, it's the inventory and then the appreciation. And you can always refinance, John. When the rates come down a little more, maybe you can then refinance it.
I know we have that guy in the car right now listening like, oh, rates aren't high. I have 2.875. Yes, we know you have a good interest rate. That's okay. These rates are not for everybody, but they are not bad. So if you are in a 2.8, 3.2 interest rate, yes, of course you're not going to do anything right now. But if you're out there looking to buy a home, they're not terrible. I always tell the story of 1982 when we moved here from Ohio. We moved here from Pittsburgh. And my father was looking at houses and the rates were 16 to 18%, found a house that was assumable at 8%, and he fell in love with that house just because of the interest rate. So yes, interest rates are better than what they have been in the past. And it does make sense. We've got clients going right now where we're refinancing, paying some debt off because there is a lot of credit card debt. What people aren't talking about is how much credit card debt there is out there. And at those high interest rates, and we're taking somebody from a 3.5% interest rate up to a 6.5% interest rate, but they're saving $900 a month. So
because you're cutting them from the 22% interest rate that they have on their revolving debt. And that's the same argument you had in 1985, 86 when rates were in the teens and somebody bought a house in 1965, 66 and rates were 4%. Okay, so it's the same thing.
Right.
6.5 interest rate is a good rate. It's a solid rate. And Nancy,
Average, yeah.
Nancy, if a house is on the market right now and it's a nice house, how long is it staying on the market for?
2 days?
Yeah. So people are
It won't
buying
make
houses.
it through the weekend usually.
Yeah.
Yeah.
So, and that's what's going on in the market. And that's what we try to tell people. You can't look at it through the lens of a 2, 3, 4% interest rate. Or else guess what? You're never going to buy a house.
Right. I have a friend who put their house on the market, and they're a little bit older, kind of your age, Harry. And
You know,
That's
John,
a
I was
little
going to
older.
say,
That's
happy
older.
birthday, John. John looks good for 60, doesn't he? He looks really good for 60. The problem is he's 52. But he
boy.
looks good for
At least
60.
you got my age right this time.
No, well, because you're old.
Yeah.
It's okay, but you look good for 60.
That's right, buddy. But anyway, they put their house on the market. So they were unaware of what kind of value they could get. When I first spoke with them, it was, I'm going to get $450 for it. I said, I think that might be a little low. You might want to reach out to a realtor. Might not want to put that house on the market yourself. What did they get in 2 days? Like Nancy said, $605.
Yeah, it's a huge
Right?
difference.
Huge
Right.
difference. Huge difference. Now, they were just spitballing with me. There was no decisions made, but pushing them to use a qualified realtor that knows the area and knows how to get the house sold, and put them in line with what the market's going, and sold in 2 days.
I was on the other side of those transactions last month as my buyers were able to put together a great for sale by owner transaction. And again, yes, maybe the seller's left a lot of meat on the bone, as we
Might
say,
have.
is because you got to get the professionals involved and find out what's happening out there. Nancy, let's talk about that inventory. Here we are. Summer's just around the corner officially. Of course, today's going to be 87 and sunny. I'll call it summer
Thank
today.
you.
But definitely summer's kicked in. But definitely the homes that are on the market, as John mentioned, 2 days, anything that's really priced right. And then we talked about even in the past with what's going on is some people price them even a little lower to create that market buzz and maybe get the house to get some overbids.
Yeah, how
Well,
about that
because-
strategy, Nancy?
It's because you want more options than less. You don't necessarily want to, pigeonhole yourself or your seller into a corner where this is the only option that I've got. We priced it, fairly, or maybe even a little bit above fair, a little bit above the market, and all of a sudden we've got one buyer to work with. Nope, we want options. We want options and choices, because not every buyer is going to make it to the closing table. So. And there was something else I was going to say when you were talking.
I'll fill that in with
but
you. I've had clients even in the past where they say, "Oh, Harvey, we didn't end up getting that. It went for 40 or 50,000 over, and we were a little unsure about the foundation."
Yep.
And then someone else buys it, so obviously there's a comfort level that's different for everybody.
Yep, that's 100% true. And, there's after, the inspection and all that stuff, everybody's comfort level is a level of concern. That's what I wanted to say.
Well, there's people that are willing to do repairs to a home once they buy it, and then there's people that aren't. And I'm not going to throw anybody under the bus, but there's some people out there that if the inspector says you need to change these outlets to GFI, they walk away. And that's unbelievable to me. And somebody who, like you said, if the foundation comes back where it's a little shaky, it may be a $10,000, $15,000 repair. But somebody's going to say, okay, we can do that if we get this home because we've been looking for a year and a half and we're not willing to pay 40, 50 grand overpriced, but we will put 10 or 15 into the foundation.
Absolutely.
Why not? You might as well. And then you're going to redo the basement anyways.
Yeah. And it also depends on how long these people are going to stay in the home. If it's a situation where, hey, we're just here for a hot minute, then, maybe their level of concern is a little bit more so. If they're going to be there for 15 years, 20 years, whatever, that's a different
Then you
story.
can put the money into it. Yeah.
It's definitely not a one-size-fits-all. It has to be situational to that person buying that property. And that's the reason why people buy those specific properties. Some people want move-in condition. Other people want a fixer-upper. Generally, they can get a little bit off on a fixer-upper than they can on move-in condition. You would hope that would be the case. But right now, with inventories as they are, I'm hearing the horror stories that there just aren't a lot of quality homes on the market, Nancy.
That's exactly. Okay. Thank you for triggering my memory. So the news reports will tell you, our inventory is getting much better. Well, actually, it's the stuff that is left over that the buyers aren't necessarily interested in. It is the homes that are a little bit overpriced. They're ones that have functional obsolescence, maybe need a little bit of love. And therefore, our market is actually about the same as far as inventory is concerned. The nice ones are on and off the market in a weekend. And so here we are left with
Some of the stale inventory. So these homes have been picked over. They've already had inspections done. They've had some price changes. They're just not moving. That's really a tough job for a real estate agent. Like, you have nowhere to go other than dropping price sometimes at that point.
Well, that's what I described to the customers. How do you catch a falling ball? You have to get under it. So you have to now, if you haven't priced your home right, you have to get under the price that it's supposed to be in order to finally find a buyer. And that's not a position that you really want to be in.
Well, the market drives the price, right? The market, and that's, supply and demand. But if the market is telling you that that price has to come down or that price is going to get overbid, it's either way. Because the market right now, there are a lot of buyers out there. Let's face it, there are people that have the money. They want to buy a house. They're tired of renting, or they want to move up, but they're going to buy houses. And we're seeing that. I've got all this paper here. I'm still a paper guy, John, because I'm really old. Yeah. I can't do everything on my phone like you guys can. So I have to have all this stuff in front of me as my notes. But what they're telling me and what our realtor partners are telling us are that there are a lot of people waiting, and they're on the sidelines. And my thing is, you've got to be in the game. Nancy, you can't stick your toe in the water. You got to dive straight in if you're looking to buy a house, right?
Yep, absolutely. I actually have a customer who doesn't live in the country anymore, and they had been renting their house. Well, their tenant decided to move out a little early, and they said, we're hearing that the economy is terrible and the interest rates are high and there's no buyers out there. And I said, oh my goodness, you couldn't be more incorrect. I said, that is absolutely the opposite.
It just remains stable here, and moderate appreciation is a good thing. We'll take 4 to 5% appreciation. That's what we see here in Michigan. Again, some other states down south. One of them was Florida, where they had to really come down on the price. Appreciation just isn't there. But yeah, try that in Delray or maybe one of the more hotter neighborhoods, like, or somewhere near Naples or something like that. But inventory definitely is going to drive what's going on out there, keeping competition really alive. There's no doubt about that. The higher rates, they're not higher anymore. I think over 7 sort of is that where they're a little bit higher and a little bit less affordable. I think anything in the 6s makes it very affordable. And then we talked to so many different first-time homebuyer programs, including the first-time homebuyers that qualify for the Mishta program. And I spoke with someone yesterday. He's got a lot of money saved. He wants the Mishta program. When I told him, look, you don't need the down payment money, but take the interest rate because it's subsidized now. So you can get an interest rate under 6%. And that might fall in line with a lot of first-time homebuyers, John, as we know.
But if you qualify for Mishta and you don't need the money, why not still take it?
Yeah, you take it.
All right. So you get $10,000. You could keep your own $10,000 in the market. I mean, play it smart. You're getting $10,000 interest free for nothing. You don't have a payment. It's not going to accrue interest. And the only thing you have to remember is that when you refinance or sell the home, you have a $10,000 silent second behind there that you have to pay off. And
people like those choices for sure.
I mean, why not? It's choice. I always tell people choices are the best. It's the best that you can do, because if you have choices, that means you can make a decision. When we have to pigeonhole you into a certain program because of your credit, your income, or whatever, then you're limited. But when you have choices, you're not.
Alrighty, demand hasn't disappeared. That's for sure. That's what we're selling you this morning, and definitely you want to give us a call at 248-539-9797. We got lots of mortgage information, real estate talk, inventory, interest rates, everything mortgage and real estate. Right when we come back, 248-539-9797. We can take your calls. All righty, we're firing things up here. Becky Alley just showed up. Hey, Becky.
You know, coming in hot like a skipping stone, two
Here
wheels
you
today.
are.
Did you get held up like I did by the Michigan State bird, the orange canary cone?
Oh, I was like, what's
12
that?
miles,
I'm
12
like-
miles closed, 13 miles closed. Okay, John, go north to come south. And
I just like get in a trance when I'm driving and I just don't even paying attention anymore, to be honest with you, because it is everywhere, especially like me coming from, I have to take Southfield to 75. I have to take every freeway to get here sometimes, so it's whatever. Here I am.
What would a mortgage real estate show be without talking about the traffic and
Yeah.
orange stuff out there? All right. Hey, we're brought to you by Capital Mortgage Funding. Give us a call all week long at 1-800-LOW-RATE, the best mortgage banker, powered by CMG Home Loans, NMLS 1820, equal housing lender. We always want to service you. So again, just make the phone call and we'll get you started. I've had a lot of great pre-approval clients calling in lately, young people, sometimes second and third time home buyers. So it's been really exciting this summer. And I think things are continuously going to keep heating up here as we dive in. I can't believe it's already next week will be officially summer, I think.
Yeah, but
next
before
Saturday.
we went to break, we were talking to Nancy about the inventory situation. I mean, Nancy, if you had unlimited inventory, you have unlimited buyers right now. You could put all your buyers in a house.
100%.
And, you hear the reports on the news that houses aren't affordable. Listen, everything goes up. And I'm not going to deny the fact that there's an affordability issue because wages haven't kept up with inflation, right? But, you have to start somewhere. If you're paying somebody else's rent right now with all the down payment assistance programs on that we could get people, and Becky's in the studio to talk about those kind of things too, because she does a lot of them. There is no reason that if you have decent credit, you make a decent wage, and yet, maybe you need two incomes. Maybe you don't have two incomes, but you got to make the phone call. You don't know what you don't know. And there are more programs now than the last 37 years, yes, John, in the mortgage industry, so people can buy houses.
And rent?
You see that, right? And rents are going up.
Well, not only is rent going up, but renting is always going to be more expensive than purchasing a home. When you purchase a home, your payment, because of all the programs, your payment's going to be less than renting.
Well, rent, there's no mandate. I mean, I can say if I'm within the fair market rent, I can say, okay, well, if it's $2,000, I can charge you $2,500, and there really isn't anything stopping me from doing that. And like John mentioned right before I stepped in the studio, and like you have decisions, you have choices, right? But with those choices, you have a decision, and everyone's like one decision away from changing their life, from whatever that looks like, right? So if you're talking about home ownership versus rent, of course you'd want to entertain that kind of decision and make a choice around that, because you are going to change your life a little bit, because we can very easily reverse engineer what that looks like for if you're paying $2,500 in rent and you're just getting by. We can easily put you in a home where you're paying $1,800 or $2,000, and now you're in the positive, and you're now parking your car in your own driveway versus somebody else's, and you don't have to worry about all of a sudden them telling you, hey, by the way, now I'm going to add my house to Nancy's inventory because I want to sell it, and I have to find something else very quickly.
But in that scenario, Becky, you're 100% correct. A lot of people have to understand that if you get into that $1,800 home that's saving you $700 a month, there's probably a lot of work that you might have to do to the home to make it what you want it, or to get it, like Nancy was saying, a lot of these homes are being passed over because buyers don't want to do the work. So if you are going to get into home ownership, you have to understand that there's additional expenses that come along with that in terms of maintenance and getting it to the way that you want it to be. And that can be expensive, but we can help with all that as well. And it's not a 6-month process that you have to get everything done the first time you step foot in that house. You have 6 months to get it done. I'm still working on things, and I've owned my home for 27 years. It's just a process.
Yeah.
And you have to want to do that. And I know you talk to a lot of people that there's just, I don't want to ever have to deal with that. Well, then maybe a condo is the way for you. It's not the best solution in my opinion, and I know Nancy just gave me a grimacing look.
She's got 3 condos listed.
Right?
Yeah.
But
it's okay.
But there is a market for people who want to be in condos, and condos are less maintenance and less work to do. But you have to understand all that, and that's the good thing about our company is that you walk in the door, you make that initial phone call, and it's not a, hey, give me $350 and we'll give you some advice. It's, hey, here's what we think, and we put options in ideas in front of you so that you can make the best decision.
Yeah, I agree. Like we're almost like it's like dangerous, because we walk this earth like with knowing all the things that we know. And we'll keep our things to ourselves, right? We don't like unsolicit, the things we have to say. But like if someone's going to call me or call you, like and you're like our brains, how our brain works. And I always appreciate when you guys answer questions too, to see like how you guys look at scenarios different, right? I even called John the other day, like, hey, I need to tap into someone's brain real quick to make sure I'm not crazy. And I was not crazy, thank goodness, because John validated me. But I do appreciate being in the room with you guys for sure. I love it.
Well,
Same.
home sales trending last week, and this is up-to-date information as of yesterday at 5 o'clock. So the week before, home sales trended up 7%.
Okay, that's huge.
Which is a 17% year over year. So anybody out there that thinks people aren't buying homes, it's an inventory issue, not a lack of buyers out there. It's a total inventory issue.
And when is the inventory going to get better? We get asked this question all the time, and if I have a crystal ball, I would tell you right now. But the builders are doing the best they can, and there's just not enough houses.
So here's the thing.
We do know the crystal ball, right? The crystal ball is an aging population that needs to get out of their homes versus the interest rates.
Well, isn't it a math issue too, John?
100%.
It's a math issue. The math equation goes like this or something like this. All right. If you get into a house right now or this summer, and the demand's going to be there because the population is aging, but also the millennials they're taking over the population. Number one population are millennials. They're going to be buying houses. So if you in your brain think, okay, for the next 5 years, the demand for housing is going to be what it's going to be, and you get into a house this year or next year, the appreciation the next 3 to 5 years is going to be greater, right?
Right.
Isn't that what it tells you?
Yeah,
Yep,
but when I said aging population, I wasn't focused on
On
the
me?
old people, Harry. You're a little sensitive when it comes to that. I'm sorry, but I was talking about an aging population, right? An aging population could be the baby boomers now having to get out of the house, or the millennials now creating bigger families, so they have to get out of the smaller house and into a bigger home. Yeah. So it's until the interest rates come back down, make it where people want to move because they just want to move. Yeah. It's right now we're stuck with when you have to move.
Well, life happens to people, and thank God for that, because otherwise, everybody would just be staying stagnant, and that's not life.
But don't you think that we talked about a little bit earlier that 7% was that magic number that people flipped out over, right? If it hits 7%, all of a sudden, mortgage rates, they went a little crazy. If they stay under 7 and approach 6.5, now don't you think the magic number is under 6?
Well, you hit it. Because the magic number in 2000 was 9, right? We hit 9.25 and people freaked out.
Yeah.
But when it was 8.25, people were happy.
Right.
Right. But now 7, because, we're coming off that 3-4% interest rate for a couple of years. So unfortunately, we say this all the time that people need to just wrap their head around it, but they're not, because they're stuck in the past and listening to the different news channels that scare them.
And if you do the math, Becky, what's the difference between 6.5 and 6, or 6 and 5/8 and 5.99?
It sounds really cool on paper, though.
It does.
When you say,
but really the payment.
I just ran the numbers at 6.5% versus 7.5% on a $250,000 loan for a client. They asked me what's the difference if they were to take $10,000 more out. It went from $65 a month to $70 a month.
Yeah, it's not huge.
That 10 grand was only $5 more. I'm sorry. The difference in the 10 grand between 6.5 and 7.5 was $5. Mm-hmm. So, but every 10 grand that for their scenario, every 10 grand that the payment went up, it was $70 per month.
Right. Yeah.
But at 6.5, it would only be 65. So it's every $5 counts. I understand, but it's nominal. If you're thinking about
picture, be there a long
if you're
time.
thinking about renting versus buying a home.
Right.
No
And I'll just clarify that, John. That's on a 30-year amortization. So let's keep that. You can still get a 20 or a 15-year, 10-year and pay things off. Mortgages have no prepayment penalty here in Michigan. So definitely on conforming loan products, you can pay extra money whenever you choose. Definitely rates are holding in the mid 6s. Fed's cutting anytime soon. Probably not. Inventory is definitely improving. there's things going on. And you guys talked about that crystal ball. Well, the National Association of Realtors said that this year, 2026, would be pivotal. And we're up about 14%. And that's what Harry just said. These numbers are definitely indicating that folks are out there buying. So if you want to get into the buying, definitely give us a call here on the show. So yeah, we have some co-signers out there. I've run into a lot of different things lately. Families, a lot of parents willing to give gifts to their children, which is fantastic. Whatever it takes to get into the property. Now, once you become a homeowner, if you've got an extra bedroom, maybe a basement that's finished, if you're younger, just starting off, again, if you're single, maybe you can afford the liberties of having a renter come in. And again, it's not for everybody. If you got the right buddy or something, it's some additional income coming into your house.
Well,
So
we
do
ran
see
into
that.
a situation with you, Harvey, this week that we haven't seen in a very, very long time, probably in about 25 years. We had a borrower that had no credit scores.
Oh, yes.
Zero. This is like
He's like, what
no,
scenario?
Totally
no
off the
credit
rails.
scores.
Huh?
No credit scores. And it's not because he didn't have credit. It's because he didn't have any new credit within the last 5 years, maybe even 10 years, right, Harv? So we were able to do a transaction, but there's a different way of doing the transaction. The rate was great, so everybody wants to know, well, he paid a higher rate. No, he didn't. But there are certain situations where this was a total one-off. This was probably 1,000 off. Haven't seen it in, as Becky would say, in the ever.
In the history of
in
ever.
the history of ever. Okay, haven't seen it in the history of ever.
Well,
and we were able to work it out.
Yes, we could do. We can pivot for any situation out there, but definitely want to make sure you're paying your utilities. Get those credit cards, but don't use them like credit cards. We'll talk about that when we come back, Becky, for sure. 248-539-9797. Keep it here. Alrighty, welcome back to the show, 8:30. Nancy Warson joins us from the Real Estate One office over there on Orchard Lake. She handles all of Southeast Michigan. If you're looking at an exclusive lake property, a golf property, whatever it might be, Nancy would love to help you. Give us a call here live in the studio. Of course, everyone's in today. Becky, John, Harry, myself. Love to take your calls at 248-539-9797. And I've had a lot of great families that I've worked with, the parents lately. Now the children are buying homes, and it's exciting. I really still love that. We all love that, but no doubt that first-time home buyer experience, and they're buying this first-time home buyer stuff. I did have some clients in the 160s, 180s, and there's homes available all around the Tri-County area, but you get up to 275 to about 400. That seems like it's the wheelhouse. If you're looking to purchase a house, that's where you're going to find a lot of competition. 325, 350, whether it be in Livonia, Commerce, those homes go quick. People want to, Royal Oak, they don't even exist anymore. But around the area, that's really the zone.
It seems to be the new first-time homebuyer price range. And, the move up buyer price range is now like the 600 and 800.
Right. Yeah,
so
it jumped.
It's quite a jump, but people have more money and they have more options and more family to help, and it's possible. And we're definitely seeing first-time home buyers moving into properties and excited about starting their home ownership journey.
Yeah, and they're like, I would say like they're more educated. I feel like when we're talking about rates, the buyers now, they are a little bit more settled in understanding that they are going to be paying a rate in the sixes. I don't think, I think like the narrative really is when you're having a conversation with these buyers, whether it's your first time or second time, it's locking in the price point of the home, because we've been in this appreciating market for several years now. And the interest rates, yes, it's a piece of the pie, but it's not the whole thing, because like we talk about identifying that payment, because when that moment does come, we can always do a refinance. And people think that a refinance is this big, giant like elephant in the room, but it's actually very easy in comparison to a purchase, because it's just me and you working together, or John and whoever working together. It's a much seamless process. But for you to not even attempt to try to step up or step down into the right home, you're doing yourself a disservice. And I think that there's more inventory coming on the market, because I feel like people are understanding that, and they're unlocking those golden equity handcuffs too.
Yeah.
Because the homes that they bought, they no longer serve them, and so they're ready to start moving, because we're seeing it every day.
So for years and years, we've talked about not using your house as a piggy bank. The however is, we've talked about using your house as a financial tool. Mm-hmm. Now, if you can use your house as a financial tool and you can access that equity, pay off high interest credit card debt, or take out equity to go ahead, and if you're lucky enough to have a parent that's going to gift you some money to be a first-time home buyer, there are ways, and there are very smart ways, that you can use a home as a financial tool rather than a piggy bank. So that has to be said. People that are just going ahead, taking cash out, going down the casino, throwing it on red or black and covering green, we can't do that. All right, you just can't do that. You don't want to do that. That's how you get in trouble. But right now, the only interest deductions that you have, if you're not a self-employed person, are your property taxes and your mortgage interest, right? So there are ways that we can help you use your house as a financial tool and really help people out getting people to buy houses. And that's the trick right now. And more parents right now are helping their kids buy houses than ever before.
That's true.
Because the baby boomer generation got wealth transferred to them from their parents down to the boomers, and the boomers are now transferring that wealth down to their kids. That's what's going on.
Well, why not try to help your family or your children now versus waiting till you pass away and then passing on the money? I mean, right now you can gift the money, and I mean, I was just looking, the stock market's over 51,000. So this is, people are seeing more and more money. Now, if the stock market takes a little dip back and you haven't pulled any of that money out, or, diversified it a little bit, but why not try to help your kids out now if you have the means?
John, I've had that conversation many, many times, because, why would I want to wait? Wait, I'm going to be dead if my kids get the money. Why can't I enjoy them having it for, them, my grandkids to be, and generations going forward? Don't I want to be alive and see that?
Didn't you say so I can hold it over their head?
I didn't say that. Hey,
no,
I did not say that.
No,
but don't you want to be around to see your kids and grandkids enjoy what you have built? I'm not saying hand it out like candy on a street corner. What I'm saying is you want to go ahead, you want to help people out, and you get that enjoyment from helping people out.
Right. My parents are doing the same thing right now with trips. So they want to make sure that the family is spread across the country. They want to make sure that the family gets together as much as possible. So every 3 years we do a family trip where my parents help with the travel because they know that my sister has the family of 5 and plane tickets are outrageous right now, $1,000 a flight. So they help with flights. They help with some of the stay to make sure that everyone can get together, enjoy a week together, and not stress about the financing.
Yeah, and that's why the housing market, that's why another reason why these houses are going in 2-3 days are because parents are coming in and they're solidifying the offer.
We're calling that birth lottery money, everybody.
Yeah, I didn't get that. I'm hoping to give it. I want to give it. I didn't get it.
Yeah.
Okay.
Lucky sperm club.
We touched on a little bit of pulling the equity out of your house to do certain things that you can enjoy. Again, whether it's you're going to finish the basement or put a pool in, or things of that nature. Pool would be a good idea today for sure.
Yeah.
Pools are worth a lot of money today. So if you have a pool, definitely put your house up for sale today.
Pool or a pond. Pool
or a pond. Pond's good for me, maybe, right?
For you.
Or a lake. But definitely the opportunity is there when you pull the money out to do the right thing with. So consolidating debt is always the first thing you want to look at. And then doing the things that will improve the value of your property and the functionality of your property. So if you have that 25, 30-year-old furnace with the AC, yes, you got to put that money away to go ahead and do those improvements to the house. Your home will appreciate. Again, talk about a $300,000 house. If we have 4% appreciation, that's $12,000 every year that it's going up. You're going to want to have to put some of that money away for home improvements. They say 1% a year is what you should have. So sometimes that can build up, and then maybe you have a big chunk of money, and then now you got a roof job down the road. But 1% of a $500,000 house, that's a lot of money if you don't use it every year.
And you know what? I want to touch on something really quickly that you said. With this rate of appreciation, we'll estimate that it's maybe 4 or 5% every year, and sometimes it ends up being 6 or 7. And as buyers are trying to get into these homes and they are maybe having to compete and pay a little bit more than what's listed, I tell the buyers all the time, do not be so concerned about it because everybody else is doing the same thing, and that is what is increasing our market. And the rate of appreciation is increasing, and you're going to be glad that you actually kicked in another $5,000 or $10,000 to actually get the home, because now you're on the way to, you've locked in your taxes and it's going to appreciate faster than you think.
Yeah. So like for easy math, right? So when people have that conversation, like $10,000, when you say it out loud, that's a lot of money, right? No one is discounting that. But when you stretch that $10,000 over 30 years, it maybe has an effect on your payment, we'll say by like $7. So it really isn't like that significant when you're going up to, let's just say, a $200,000 house or a 190 house to $200,000, right? You're now going up maybe $70 in your payment at most. But now you're also in that 5% appreciation. So now that $190,000 house, just for you doing that, now you're naturally getting that $10,000 if there was that 5% appreciation in, within the market. And you're going to make your money back. And if we can make sure that you can afford that $70, and if $70 is going to stretch you too thin, then we need to recalibrate the whole price point altogether. But we also understand sometimes we're pre-approving people where it's a dual household income and only one person might be on the loan. So if things seem stretched, we also know that there's other money within the household that maybe isn't just being shown on the credit profile. So you have to do a deep dive, but that's part of like why we love what we do. You're not going to get this black or white answer from us. It is, what is the scenario? What is the best scenario? What are you trying to do? And, maybe after you own the house, we can do a home equity line of credit to actually do those home improvements, finish the basement, put in the pool. I'm doing several of them right now for longtime clients of mine because it made more sense to do it that way than it did to do a cash out refinance. So you have to just get with the right people and have the right conversations and have a high level conversation with a high level loan officer, because we are a dying breed out here, everybody.
Life events never stop. There's no doubt about that. Your job relocations, your family's growing, downsizing, upsizing, divorce, first time home buyers entering the market. It's a fluid market. There's lots of fun stuff going out there. If you want to be pre-approved or find out what you qualify for, it's a simple phone call. It shouldn't cost you any money. Just call us at 1-800-LOW-RATE. Definitely get a qualified loan officer on the phone with you and go over these deep dive conversations. We break down all the numbers. Numbers don't lie. We do the math for you and show you what some payment scenarios look like. And that's the key, is that confidence. Buying a house is all about confidence, because you got to sign on the dotted line. And that comes up pretty quickly on you. Most transactions, as we know, are closing within 3 to 4 weeks.
Yep, absolutely. And you feel good about yourself when you actually, you feel a sense of accomplishment when you're purchasing your home. So
Yeah, there's like, I mean, there is like, I would say like self-worth attached to that for sure, because now you're in control of where you're living, how you're doing it, and whether it is a condo or a single family home, right? Single family home is, like your normal neighborhood house, but like everyone has a need, and what is that need? Do you not want to shovel your own sidewalk, and does a condo suit you? But then what's that association do? It's like, so if you're buying a condo, you have to really know what that looks like. So if we're pre-approving someone and they do not say out loud that they are trying to purchase a condo, and then all of a sudden they're giving me homes they want to run scenarios on, I'm like, hold on. Everything is different now, because now you have to factor in maybe minimum 250, but what's happening now is these condos are at least now $400 to $500 a month. Some of these for these associations, it is quadrupled, or it's not quadrupled, but it's like doubled and tripled from what it was even five years ago.
Normal.
Yes,
That's a normal.
What 250 used to be the standard, and now it's 450 for sure.
And you can go out and get a house and find someone to mow your lawn
For
on
less.
a weekly basis.
Yes.
Right. So the unknown in the state of Michigan is that your grass needs to be cut once a week. All right. So you can figure out that fixed
Maybe you got to
cost.
shovel your driveway off in the wintertime. I did a lot last year.
If you want to pay someone to do your snow, that's the unknown, right? How many times is it going to snow? Because I feel like it snows every single day here in Michigan in the wintertime. And so that may get a little bit more expensive, but the average is still going to be better than the condo association.
Yes.
All right, if you're thinking about listing your house, we've got some helpful tips right when we come back. 248-539-9797. Keep it here. All righty, welcome back to the show, 846, the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. Give us a call live in the studio, 248-539-9797. Got a ton of shows lined up for you all the way through Christmas time this year, and we hope to get you and your family into a new home. That's what we do. Always some positive things you could do this time of year. And my favorite, of course, Nancy, is always making that landscape look really good. Flower, garden, you name it. I'm out there. I
Your
don't go
favorite.
inside. That's my thing. Yeah. What else? Some other helpful tips besides, especially this time of year, gorgeous day today. I mean, a bag of mulch doesn't cost a lot. I get the triple shredded, good stuff. But
John loves the mulch.
I know we're
I
mulching.
was just
John-
waiting for Harry to kick in.
John
you know what,
loves
Harry?
the mulch.
Harry used to say, "I'm not paying for dirt."
Yeah,
John
we're paying
loves the
for
mulch.
it.
Every year, John wants new mulch. You know that. He's
I
coming-
do. I do. I do
It's
get new mulch in
unbelievable.
my house every year.
This is going to turn out to be the mulch and landscape show.
We should do a show like that.
What else? What else can we do to really? I mean, look, you pull that power washer out because those things are addicting. You start power washing, you power wash the whole world.
Absolutely.
It is, power wash is addicting. I'm like,
It's
I'll be
addicting.
like writing my name.
And you know
like,
what? Pay
Harry,
attention.
do you know what a power washer is? It's
Hey, bro,
I'm not sure.
I don't know what a grocery store is. You're asking me about a power washer.
Call the guy.
Call
Oh my
1-800.
God.
Call the guy.
I think I might love Harry.
Thank you.
So even though you don't use your front door, everybody else does. And if it looks like spider webs and it is like nobody even wants to touch it.
And it's not Halloween?
Yeah. Right. right. Yeah, so I would say, a good power wash. Your brick pavers get, gross and, moldy over the winter. But so, yeah, a power wash will go a long way.
All right, definitely do those outdoor landscaping things that you can get done today. Maybe not today. It's a
Cut
little
your
on the
trees
warm
back.
side today. The trees are always, we're always out there pruning or doing something out there, hedging. I mean, whatever. If that's not what your fancy is, hire it out. I asked Becky, Becky, who takes care of your stuff? She cuts the back of the lawn, but some things you
But
do
not the
hire
front?
out. No,
Just
no,
the back,
no. Hey,
not the
that's
front?
too big. That's too big.
Not the front, just the back. Yeah,
Yeah, not allowed to come in
Yeah.
my backyard. But lots of things you can do. And again, because we touched on it, the fact that maybe, a condominium works for some retirees and it doesn't work for first time home buyers. I like home ownership. I find more appreciation. And again, I don't know what the statistics are here locally, but I'm guessing a single family home or a duplex would bring more appreciation than a condominium.
Absolutely. Now, a single girl or a single guy who is, just wants to get into home ownership and doesn't really know how to do the maintenance. Maybe a condo is the first step for them. That's great. But yes, a house is going to bring you more appreciation than a condo is. It's just simple. The condo complex owns all of the land and you are a co-owner where you own your whole property if you are buying a single family home.
Yeah, and with the condos too, though, I have probably like 2 or 3 people where they're trying to buy a condo, but even in let's just say Southfield, it's $150,000. They're retired. The condo association's like $410 a month, and then with the taxes, it's difficult for me to qualify them for a condo because of these association dues. And when you're on a fixed income, so that's why if someone is retired, you have to be very vocal, and we have to constantly really look at each individual scenario, because if these taxes are or where they at, we know they're going to go up as well. And so because we know what the future payment's going to be, I have to make sure that not only what they are doing 5 minutes right now, but 5 years from down the road, can they afford this home? And that I have to constantly be relooking at these numbers over and over and over again.
And what we just talked about when off air was that some of these condos do have a lot included in the association dues.
Cable's wild.
Down in Florida, that was cable, but water, sometimes gas and electric. So those are great things to have as part of the association, but that doesn't help us with qualifying you because we don't take water, gas, electric, cable into your qualification purposes. So when we're just
Or
talking
cell
about
phone.
when we're just talking about numbers, it has to make sense with the association, and you have to qualify with it, even though those things are now going to be covered for you, and you actually might be saving some money. But just take that into account when you're going into a condo.
Yeah, a couple conversations we should have when people buy homes, and then a couple years later, what happens are taxes are going to go up because of home appreciation. And when taxes go up, the escrow account, if you have it, and an escrow account pays your taxes and insurance going forward, that you're going to end up with you could end up with a shortage. So you're going to get a letter from your servicer that says that you are short and your payment's going to go up. I'm just going to use a number because it's a real number, $250 per month per payment. And that is because your taxes went up and the mortgage company, the servicer, actually laid the money out for you up front, interest-free, to pay those taxes. So while you're not going to be happy when it says your payment's going up, they actually laid the money. We actually laid the money out for you, but therefore you have to make it up. And it's going to increase your payment. So when we have those conversations about people moving and appreciation, your taxes are going to go up for sure.
I got to tell you, if you have the opportunity to pay your own taxes and insurance, please
do.
Do not let a mortgage company pay your taxes and insurance for you. Some programs require it, but if you have the option, please do it yourself because it will save you so much frustration. I will still take your phone calls and answer why your taxes has increased and all that. But at least we don't have to worry about your monthly mortgage payment being adjusted so much that it's uncomfortable for you.
So we believe in you controlling your own money. Okay, and this is the way you control your own money, your own funds. And by the way, if you can't do it and you're undisciplined, then maybe you need somebody else to make your payment for you.
Right.
All right. There's no right or wrong. If you lay your head down on your pillow and say, hey, listen, I just don't want to worry about it. You need a tax escrow account. Hey, I'm all for it.
Yep.
But
Just make sure they explain the escrow and how it's going to adjust.
Yeah, but most of the time I would tell you, my advice would be if you're good with money and you're disciplined, you're going to get the bills twice a year on your taxes and once a year for your homeowners. Pay it on your own. It'll uncomplicate things for you.
Yeah, because in an escrow account, it's non-interest bearing, meaning that no one's really making money on that money. Actually, no one's making money on that money. So what they're ultimately saying is if you are...
John, here we go.
Yeah, if you are able to do it and you can set your money aside, let it grow interest in your own bank accounts, and then when those tax bills come due, cut the checks yourselves. And that's ultimately like if you're able to do that. And everyone knows how to, but you can practice that. And if you can practice it before homeownership and you're able to, put 20% down, that's always a conversation that we're going to be having with somebody in regards to do you want tax and insurance included in your payment? Because it's going to keep your payment the same.
We're 18 days away from getting that summer tax bill. Look, if you do have an escrow account, that summer tax bill still shows up again. You might want to call your servicer to double check to make sure that your current lender, your servicer of your transaction has paid those taxes. If they haven't and they made a mistake, again, they'll handle them, but you have to make those phone calls.
And even right now for purchases too, though, like this is a thing where if, you got, people are, most individuals, not all, the biggest issue is coming up with funds for closing. And this is that time of year where it's even going to be a bigger surplus because we have to anticipate the summer tax bill. So for example, if you're closing in June, your first payment's not going to be due till August. We have to collect like up 100 and what is it, 25% more?
150.
Minimum.
Yeah, 150. Okay.
Right.
So it's whatever the tax bill is, they're going to add like bare minimum 25% of that to your bottom line because we have to make sure that there's enough money to cover that summer tax bill that's coming out July 1st. So just know that that's part of the conversations immediately if you're trying to buy a house. And then also after you buy the house in July, let's just say you're buying a house in August, you now have to turn around and pay the seller back in most counties in Michigan for that summer tax bill that was just paid. So it's definitely right now is that time of year where more money is collected at the bottom line on a purchase.
If you haven't paid your property taxes, if you have a land contract situation, there's a lot of moving parts there. You definitely need to get a hold of that and make sure that your property taxes are paid. If you want to do
You say a land contract? Is that what you said?
Yeah, even if you have a land contract and someone's not paying the property taxes, you don't know you're paying the landlord lost track of it, or the holder, the seller who sold you the land contract hasn't quite transferred. There's a lot of moving parts. We like saying moving parts. One of the things is get your ducks in a row because you could do that refinance transaction, a cash out, to put some money in your pocket. You can pay your 2 or 3 years behind on your property taxes, pay off your credit card debts, consolidate it all and change your life.
I mean, people have been refinancing, really, I don't think they've ever stopped. Even like when the individuals that collect, that were having the 3 or 4%, they've been foregoing these interest rates because some of them, like we talk about it often, they overbought in 2020 and then the tax is uncapped and now and then the wages, like Harry said, the wages weren't catching up and they've just living up their credit cards. So we've been refinancing them. We're doing equity lines of credit to reset the baseline for those people to get them in a better, healthy financial status so they can have something that they can afford again. They don't necessarily have to move if they don't want to.
We were talking at break a little bit as well about what we could have going on this weekend. And Nancy brought up a really good point that she's taking a client out to a house that's currently under contract because there's so many people that are the offers are falling through. So why not have a backup offer and or have an idea if that house is
Well, yeah, they. So even personally, I had a listing go way over asking. Well, a day later they backed out, and this listing is going way over asking. Chances they're going to probably back out, and they just wanted to get it.
Yeah, like I want to
That's
win.
good.
Yeah.
Good.
You guys were coming up against the end of the show here. I see Mike Stone and Brendan. They're out there. They're getting ready to talk some sports here. Talk about the Tigers. I think they're playing this afternoon here. A lot going on across. We got the soccer, the World Cup. That's
It's
going on.
It's
John,
Scooble
you're going
Day
to bring
today.
it up.
It's
Yep.
Scooble Day today.
Scooble's throwing today?
Scooble's
Oh, we
throwing
need a
today.
W down there.
Quick shout out to the Heidemann family. We lost a good friend, Noel Heidemann, this last week, realtor, and
Been on the show a lot.
Been
yeah.
on the show a lot. Sorry for the loss. What a great human being, and you'll be missed, Noel.
Respect.
Well said, John. All right, we got sports coming up here. Keep it on 97.1 The Ticket. We'll see you next Saturday.